Welcome back, traders and investors. We have Serge Berger on the line, and he is a head trader and investment strategist at the Steady Trader, active trader since 1998, and also the author of the Hot Stocks to Watch newsletter. Serge, how you doing on this Wednesday morning?
I'm doing wonderful. It's good to be back on here, Joel. Still kind of trying to figure out what the next, 5% in the markets are, heading into September. But, I think one day at a time here is the approach.
Yeah, when I saw that you were coming on today and your name, the Steady Trader, I mean that just from the discussions that I've had with you on the interviews, that's just you never get too excited on the upside, you never get too excited on the downside, and just looking for steady, consistent profits. And you share a newsletter, the Hot Stocks to Watch newsletter. Could you tell us about that, please?
Yeah, we recently launched the daily Hot Stocks to Watch newsletter, which is basically just my best idea of the day. They're not day trades per se, but there will be the best trades that I'm looking for that any particular day to do. And it's just it's very straightforward. It's sort of a two-paragraph description of what's going on, and then a very clear and concise chart to go along with that to kind of show you what's going on and the reasoning behind it, backing everything up, including a price target area or a price target area and a stop loss area as well to go with that. So we're excited to have it up and running.
And what are you looking at today?
I'm happy to give it away. Basically today it's Facebook.
Okay.
We saw Twitter. I'll highlight a Twitter on, I think it was Monday, and Twitter bu- busted higher. What was it, 4.5 something percent yesterday?
Yep.
And Twitter and Facebook looks pretty much the same. Not surprisingly, right? Looks very similar. So as long as the broader market can hold up here, I think there's no reason why this thing can't go to $80.
Okay, so do you pay much attention to the analyst ratings? A little downgrade from Janney Montgomery today. They have it trading down 70 cents. Are you looking at this as a swing trade perspective, where you're gonna you don't mind picking it up at 75 and watching it go to 73, or are you just looking at more on just like a day trade basis? You're gonna fade Janney here. I do see excellent support at 74, 73, and 76, the double bottom. What's your time frame on this, and how much do you let an analyst upgrade or downgrade affect your strategy?
Yeah, I mean, they're obviously very fair questions, and I basically to get to the point in terms of time frames. Usually, time frames are swing trading time frames. So anywhere from on the low end, they're like 2 days to usually a couple of weeks of time frames. But of course, it depends how quickly the stock moves, right? You never know. Like Twitter reached my first price target yesterday within one day, so you just don't know, right? But basically, in terms of analyst stuff, you know. I have a hard time, sort of just like what you said before, try not to get too excited or too not excited about stuff. It's kind of the same thing with analyst up and downgrades. Like, I originally came from the fixed income world where there was so much noise every single day from credit, credit news, upgrades, downgrades, all sorts of stuff. And so with stocks, it's the same way, but I think people shouldn't be as sensitive to it as they are. So, we'll see how markets react to them, but most of the time one up or downgrade isn't gonna make or break a stock. So I'll respect it. I'll see what the stock does in reaction to it, but I can't say I'm gonna be throwing this idea out the window because of that. It's just sort of we have to see how the market reacts first here this morning.
Dennis and I have a list of firms that we put much more credibility in, and pay attention to their calls. You can obviously pick out a few of those firms. Your Goldman Sachs, maybe your Bank of America Merrill. Throw in J.P. Morgan in there, Morgan Stanley. Do you have any analysts that you could take a little bit more faith in their calls?
Yeah, in terms of the old Wall Street guys, like the big white glove banks or former investment banks, like you just mentioned. Obviously, I think it's always important to listen to those guys. I'm much more finding myself finding value in some of the more independent research companies like a hedge eye, for example. I think those guys are really, there's no, they're not selling you anything, or they're not going to sell anything other than just laying it out, laying out their idea. So I feel much more comfortable actually going with an idea if it comes from a more neutral source. Having worked on the investment banking side, I know how the business can be. So.
Okay, enough said there, Serge. Okay, what about the market here? S&P cash has gotten over 2,000. I don't really pay much attention to that. The futures got to 2,275 yesterday. Tight range overnight, coming into the holiday weekend. What's your strategy for the rest of the week?
Yeah, I mean, I laid it out at the end of last week, and particularly on Monday for my clients. Basically, come into this week, I said, listen, we're gonna have a sort of a tale of two tapes, so to speak, or at least two volume type of tapes. I think it's month end as well. So basically, I think today is probably when mutual funds and anyone else gaming the month end stuff is pretty much done doing their stuff. It's also probably going to be pretty much the day when people start filing out for a long weekend. So I think as of like late tomorrow, so late Thursday, midday, let's say, I think people are going to start filing out, and Friday is going to be, at least from a volume perspective, probably going to be a joke. So I think that's sort of that, and then we'll see how next week goes. But looking out sort of a few weeks, I have sort of two scenarios. I'm working with a very high cash level in the portfolios. In fact, I have all year. I think I've said that each time I've come on over the past few months on your show, and that hasn't changed because I still think, from a cyclical point of view, we can really go lower here, right? And like materially lower, and actually get like a decent 10% correction. But of course, we need to see price action to actually confirm that. We haven't, and it doesn't look like we're going to have. Financials are very strong. To me, I'm really just looking for a major bearish reversal that pretty much will confirm a top. Right, because we do have a lot of negative divergences in sort of more important sectors like industrials and things like that. But we haven't seen the price action. So on one hand, that's one thing to look for. On the other hand, I think extremely bullish and pretty much out of consensus would be if we just consolidate around the 2,000 mark. Let's call it 1990 to 2020 or whatever, something like that. We consolidate around there, and then ultimately just get a monster rally through the fall and right into year end. That's totally out of consensus, but being traders, we have to be open to all opportunities. So it's one thing I have on the table as well as, or at least as a consideration.
Everyone has their own, definitions of a bearish reversal. Based on the S&P futures right now, what would that be for us to go up, make a new intraday high above that 2,275, and then come back and take out yesterday's low and close below that, or what criteria would you use basis the S&P futures right now for a bearish reversal?
Yeah. Yeah, I mean, great question. I mean, I think basically what you need to see is some sort of an outside day, right? Or you see some sort of intraday spike higher and then just a massive reversal lower, right? And that can take a couple of days to actually form, but I think that's what I'll be looking for. So if I'm just pulling up the daily chart of the futures here, the September contract, I think we'd probably need to see something, in the order of, 1990 or something like that to be taken out. And if you want to talk about a bearish, like outside reversal day, we really need like a big one,
Right.
because this move up has been so ridiculously steady off of the when we made the lows on the 8th of August. I mean, it's been insane, right? And it's literally driven people insane. I've talked to a lot of people every day, and I have fund managers that just literally just said, "Listen, I'm taking the rest of the month off because they can't deal with it."
That's interesting. You mentioned the Twitter and the Facebook here. Scrounging for value here. Is there anything that is on your radar here that with the market being new highs, you're not afraid to dip your toe in the water? Is there anything on your buy radar besides Twitter and Facebook that you mentioned?
Um, Actually, there is one stock out there that I keep looking for. It's not the most exciting stock from a trading perspective, but it's a VF Corp.
Uh huh.
VFC is a ticker symbol. It's just built a monster base basically all year, and it's just starting to break higher. So through a purely technical lens, it's holding the 200-day like a champ. It's pretty interesting, and to me, what I like about it, it's kind of a boring stock. So I suspect if the market pulls back, it's not going to get destroyed immediately, like maybe like a Twitter would. right? So that's one thing. Otherwise, I think the financials. I mean, it's just very difficult. Even looking like at Goldie at Goldman Sachs. I mean, yes, we can get a double top here, but it doesn't smell or look bearish, you know.
I know.
So at least for a trade up to like 190, it's not totally out of a question. And I just had a long conversation with one of the greatest hedge fund managers I know, just before God hopping on the show here with you, and we were just going through charts and charts and charts, and yeah, from a technical perspective, there's a reason to be afraid of it in terms of momentum, waning upside momentum. But pattern wise,
Yeah, I
it's
agree with
it's
you.
hard. You know what I mean?
Yeah, believe me, I know I know exactly where you're coming from. And what about? I mean, you like the short stocks too, don't you? I mean, if they meet
Hmm.
your criterion reverse, I mean, being a veteran of Wall Street here, you don't mind playing the short side, do you?
No, there's stuff out there. Actually, very interesting to me is like Sina on the short side, Sina, the
Okay.
Chinese. Yeah, it just looks like a dog through a technical lens. And that it's just basically sort of bounced off of those late 2012
Oh
lows
yeah.
again in May, and now just looks to be sort of hugging, or sort of, yeah, huddling around that line, and potentially, if you want to talk technicals, maybe kind of fall through this bear flag that it's building, or whatever you want to call that. It just doesn't look bullish. Let's put it this way. It looks very bearish. And interesting is that it's completely diverging from like some of the other internet stocks, like a Twitter and a Facebook.
Okay, and so you covered the upside, you covered the downside. Any final tips for traders? Where Harlan had talked about the seasonal patterns and some run up into the holidays, the run up into the Memorial Day. We had just a consolidation week after, and then we blasted off. 4th of July, we had a little bit of decline. Are you looking for any kind of seasonal patterns in the market here based on Labor Day?
Yeah, I mean, I think that that's a great point, and it's basically what I just said before in terms of this week. Yes, we could get some sort of monster reversal. Anything's possible, but I think odds right now, and famous last words, favor sort of a slow melt up into the weekend. Never short adult tape. I say that like 100 times a day, mostly to myself,
Yep.
and and just so you kind of go crazy if you reiterate the same thing. But it's an important point, and so I have no problem expecting some sort of a melt up here into weekend. But again, I think coming into September, it's just historically speaking, it's been a more volatile environment. People think it's a crash month. It's never a crash month necessarily. It's just more volatile, and for a trader's perspective, volatility should translate into opportunity.
Okay, well said. Serge Berger, head trader at the Steady Trader, also a publisher of Hot Stocks to Watch newsletter to get some things on your radar. Serge, thanks again for coming on. We hope to speak to you again soon.
Thanks, Joel. Great pleasure.